Hey there, everybody. I'm Carrie Hamblen, the CEO and president of the Las Cruces Green Chamber of Commerce, and we are coming to you again with our ongoing series with our pals at Nusenda Credit Union, providing you with helpful financial tips on a number of topics, from budgeting to money management to boosting your credit score and what to do with your taxes and so much more. And today we've got back with us Adam Hain, Chief Financial Officer for Nusenda Credit Union. Hey, Adam, it is great to see you again. How are you doing?
Doing very well. Great to be with you. Good to see you again.
Same here. How's your 2024 starting off?
Very well. It's a whirlwind at the moment, but just like every year, I guess, it's just like ready to get going, closing out the year.
Yeah, and we've got, folks who are starting to think about their taxes and,
Yep.
that's when like really our financial stability starts to really like weigh heavy on us because we're looking at our taxes and ways that we can kind of cut back and all sorts of stuff. But one of the things that's part of that is our credit scores. And, we often think, and I think you and I talked about the last time about, I remember my first credit card, when they start hitting you up when you're in college just to establish a good credit history. And that, I guess that leads into our first question about why it's so important to have a good credit score.
Um, you know, like it or not, it's really your financial report card. And we take a look at it and is fair. You can say it's fair or it's unfair that your entire financial life is based on a score. I agree. I'm with you. And it's kind of a black box to people. But it really is your financial report card. Every lender uses it when they're pulling your credit to review if you're going to pay back a loan or not. So it's extremely important. You get better approval odds. It's cheaper to borrow money because you have lower interest rates than if you had a higher credit score. You have an easier time renting an apartment at times. And another big one I always tell people is you get automatically qualified for the credit cards that have perks. So you might get pre-approvals in the mail, those sort of things. But really, lenders look at a set of criteria before they send out those type of offers, and the first one is what's your credit score.
Yeah. Well, and on that, I mean, there are three different agencies. Am I correct on that? Like,
Yeah,
that you can check your score, but there's always the concern that when you do that, then it dings your credit score and it brings it down a little bit. So you want to be really strategic about when you check your credit score and not just do it for giggles, but actually do it at strategic points because it can affect you. Why does that happen when you check your credit score? Why does it affect that?
it's actually not when you go in and check your credit score. That doesn't matter at all. You could do that as much as you want. You could pull your own credit reports and take a look at it if you'd like. What really starts to affect your score is if you go and apply for a new application, a new loan application. And if you do that a lot and lenders are pulling your score a lot, that really starts to hit your score a little bit. It's not as much as people think. It's usually like 5 to 10 points, maybe for a month, and then it pops back up. But if you're doing that consistently over and over and over, the model thinks like, hey, this person really needs credit. They're going to go get more credit. So at any moment now, they could have another 10, 30, 40, $50,000 in debt. So it's kind of like preempting and showing lenders this person's shopping around for more debt.
That makes a whole lot of sense. I never understood why that was always impacting it when it didn't, like, financially. It's not like you were borrowing money right at that very moment, but that
Right.
makes sense that they're looking at this is what it looks like your plans are. And
Yeah, it's like they might be more of a credit risk only because they're going to take on more debt in the next however many days, fair or not. But really, it only impacts you 10 points, and then it pops back up.
well, that's good to know. So after like
Yeah,
a month, you want to wait 30 days and then you can safely go and do that. But it's also nice to know that if you do it personally, it doesn't impact your score at all.
not at all. Another thing I always tell people is like, when you pull credit, it's okay to go shop around. You have a 7 day window where you can get your credit pulled as many times as possible, and you'll be okay. So you could pull it 30 times and you go shop around at different lenders. You see what rate you might want, what terms you want. You really just get hit that one time, the first time it's pulled during that 7 day window. But
Okay.
then if you keep doing it every 7 days over and over, that kind of keeps hitting you 10 points over and over for a while.
Well, and with that, I mean, you talk about, if you wait a month after you've checked it, or if after somebody else has checked it, what are other ways that people can help bring up their credit score?
There's really five major components to what make up your credit score. Nobody knows the exact formula. Again, it's kind of like a little bit of a black box algorithm, but there's five main components. But the first thing I tell people is you need to track it. Like, you need to know what your score is. And you don't have to go into like annualcreditreport.com and pull your full credit report all the time. You can just get an app. We kind of show you your credit score on our app. Every time you log into our app, it shows you your score if you kind of opt into it. You could opt into things like Credit Karma is one that I use also personally. So you go in, and every time you go in, it gives you kind of an estimation of what your FICO is, what your credit score is. And then it tells you those 5 major components that are making up your score and kind of ranks how you're doing on each of those 5. Our tool does that as well. So it'll give you the 5 components, and it'll say A, B, C, D, or E, or F, kind of like your report card, on every one of those 5 components.
And so with that, I remember years ago when I was buying our house, you see behind me, that you would see, like, I had a gas card, which was popular for a long time. But I hadn't been using that gas card for years. And so there is some homework that you have to do, and kind of have to put some work into it to make sure you kind of remove those extraneous cards that are no longer active, that you're no longer needing or using. And does that also help out with that?
It actually helps if you keep those open.
Really? Okay.
Yeah. So it actually hurts you if you take those away. So I'll explain why. 2 reasons. The first is length of credit history is one of the major, one of the 5 components. And what they do is they look at all of your open trade lines. You have an open credit card, an open auto loan, and they look to see when that was opened. And then they do an average of how long all your loans have been open, and they give you kind of a 1 year, 2 years, 5 years. If you close your oldest card, that's gone from that calculation now.
Right.
So
right.
I've
heard that too. Yeah, I've heard that too. I kept my very first credit card open for a very long time.
Yeah.
Just for that reason. But like, so an example, like with the gas card, even though I wasn't using it anymore, and hadn't for many years, I still should have kept that on there.
I would have told you to keep it.
Yeah.
Yep. Okay. As long as a lot of card issuers will delete your credit card if you haven't used it in 6 months, a year. So they'll give you kind of a warning. I always tell people, like, if you have a credit card you've been using since high school or college or whatever, just put something on there once a month, so it just kind of keeps it active. And if you don't ever want to use it, that's fine, but just keep it active, because all it does is extend your credit history and help your credit score. And also, what it also does is one of the other 5 components is credit utilization. So your credit, a total available credit, think about your credit card limit. Maybe it's 10,000, 15, 5, whatever it is. They look to see what percentage of that limit you're using. So if you have a $10,000 limit on your card and you have $7,000 on that card, your utilization of that is 70%.
Mm-hmm.
If that gets above 30%, it starts to hit your FICO score. So I always tell people, and what they do is they add up all your credit cards for the limits and all your balances, and they do that ratio. Mm-hmm. So I always tell people, just keep your limits as high as possible, but your balances as low as possible.
And it's always good to try and pay off your balance every month if you can, right?
Definitely, 100%. Pay it off. Use it, get it on there. Especially if you have rewards, use it, but just pay it off every month, because it'll keep that utilization.
Well, in addition to like helping like strengthen your buyers or your purchaser kind of credibility, what are other ways that people can use credit cards to kind of build their financial foundation?
You said besides kind of building that credibility?
Yeah. So, we use the credit cards to show that we can go ahead and pay off, that we've got a good payment history, that we're good on our word of buying things. And I'm wondering, are there other ways that credit cards can help us kind of strengthen that, so that when we do eventually, like if we have to apply for a loan, that they can see that we're a good risk?
Well, I think I'd answer that 2 ways. And maybe I'll get this will be a little bit of personal advice here. But there's a fraud component to using a credit card versus a debit card.
Mm.
And I always tell people, like, one of the major benefits of using a credit card is you're really using the issuer's money to buy things.
Mm-hmm.
When you're using your debit card, let's say you have something fraudulent on your debit card. at a gas station and they have something that reads it, they go and then they pull it right out of your checking account because your debit card's linked to your checking account, right?
Mhm.
That's the cash. That's cash that you use for rent. That's cash you use for utilities. And versus a credit card, if it's fraud, it just attacks that credit line rather than your cash. So I
Yeah.
always tell people, like, try a lot of times, be careful about using a debit card and where you're using your debit card, because if there is fraudulent activity, it's on your cash versus a credit card, that you have fraudulent activity, you can close the card immediately. You don't run into any issues. Your cash isn't touched, etc. So that's not answering your question exactly, but I wanted to throw that in there as one of the important pieces why I recommend people have a credit card.
Right. Well, I mean, there are cases where I think mine, I can either say cash or credit. And so, like, if I were to purchase gas at a gas station, I should go with credit rather than debit.
I would just say if you have a card that's linked to your checking account,
Mhm.
whether it's even if it's just a debit with a PIN or a debit signature, if that card is linked to your checking account, you're opening yourself up to a little bit of risk.
That makes sense. Okay.
Yeah. And it's just like, you know, just be careful where you use your debit card, because if there is that activity, it's attacking your cash that you use for rent, which is kind of a big deal.
Yeah, and it's hard to get back.
Yeah, exactly.
It-
Then you have to
it-
go and you file a claim for your cash. It takes a little bit of time versus if it's credit card, it's like, okay, I can not use that credit card for a little bit while they settle my fraud claim and I still have my cash.
yeah, yeah. Adam, I learned something from you every single time we talk.
Oh, good.
I am
That's what I
so
like to hear.
I'm so grateful, and it's always a pleasure to talk to you about, really ways to strengthen our credit, because that's like one of the most frequently used forms of
Yeah.
financial transactions right now. I know a lot of young folks don't use checks anymore,
Nope.
which is interesting, and it's like, oh, just Venmo me. Um,
Yeah.
and so it's also learning how to navigate kind of a new financial landscape. And so, thank you so much. I'm always really grateful to talk with you, and I know that we'll be talking soon again. So thanks for coming in.
You're welcome. It was fun. Appreciate it.
Absolutely. On our series, Nusenda's Financial Well-being Tips they drop every second Monday of the month. And if you'd like more information on the services provided by Nusenda, you can go to nusenda.com or call our local branch here at 575-523-7750 in Las Cruces, or go by their office at 1715 East University Avenue. And you can also find all of our financial well-being tips at locallascruces.com/Nusenda. Adam, thanks again, and I will be seeing either you or one of your colleagues again next month.
Sounds great. Take care.
All right, bye-bye.